Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Asia podcast. I'm Brian Curtis along with Doug Krisner. Join us each day for the stories making news and moving markets in the Asia Pacific. You can subscribe to the show anywhere you get your podcasts and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app. Yeah, Greg Korte joins us now on the program, Bloomberg senior White House and politics correspondent. You know that when the gaffe straw gasps, you're in trouble. He had some stumbles. President Biden had some stumbles there right at the outset, in particular when he referred to Vice President Trump, and Trump has joked about that. But there were plenty of moments, normal clarity as well. But you wonder whether it's enough for the Democratic, people.
Yeah, my sort of take on this was that it was sort of a betwixt and between, right? It was not going to mollify all the critics that have been, amplifying this drumbeat in recent days. Drip, 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 one Democrat after another calling on the president to resign. It's still a very small minority of his party, I should say, that they are calling on the president to step aside and let somebody else run for office. He would presumably remain as president. But then, on the other side, it wasn't so bad that there was nothing that happened today that I think it would change President Biden's calculation or the people around him to say that maybe it is the time to sort of think about passing the torch. So I don't know that this press conference helped him all that much. I don't know that it hurt him all that much either.
Yeah, when asked about, what might make him pass the torch, the only thing that he would cite was if his advisors told him that he couldn't win. What sort of process would that be? And how would, even if you cited polls, I mean, that's not going to convince the president that the polls know all.
Yeah, especially since this particular president, and to be fair to him, most politicians tend to take very rosy, optimistic views of the polls, even when they're behind. And he is behind in all of the polls. He tends to cherry pick the polls that he's doing better in. He is doing better, we should say, in the Bloomberg News Morning Consult poll of 7 swing states. He's only down by 2 percentage points across those 7 states, but he still loses the Electoral College, even in that poll, which is one of his better polls. So he's also correct, though, that we have 4 months to go until the election. It's still summer. It's early July. We haven't had the conventions. A lot of people aren't as focused on this race as you and I are. And so he still thinks that there's a lot of time to play catch up. And historically, he's probably right.
How rigorous is his schedule over the next 2 weeks?
Well, he has an interview with NBC's Lester Holt on Monday, and he's going to be making some campaign visits to a number of key swing states. Now, next week, of course, is the Republican National Convention in Milwaukee, and traditionally, campaigns tend to go dark when the other party is having their convention. There's been historically a little bit of a gentleman's agreement to let them have their say, given that most of the attention in the political world is going to be on the Republican convention anyway. But maybe it looks like Biden might be doing a little bit more aggressive counter-programming, getting out on the road. Look, I think he knows that he can't run the basement campaign of 2020 that he ran during the coronavirus pandemic. He's going to have to visit all these states, and he promised to do that today in the press conference.
Earlier, Ed and I were having a discussion about the process, what would come next if for some reason President Biden decided that he did need to step aside. What do we know about that process?
Yeah, so the easiest way for this to happen is for him to step aside and tap a successor. That successor would have to be ratified at the Democratic National Convention in Chicago next month. And as it is right now, Biden has 99% of the delegates, of the pledged delegates, I should say, to that convention. He said tonight that all of those delegates, regardless of whether he drops out or stays in, are free to vote their conscience. That's just a restatement of the rules as they exist anyway. But it would take then 600 of those delegates out of 4,000, 5,000 or so to place other names into nomination. and have the party decide. The presumptive person who would take over in that case would be Kamala Harris. She's the vice president. She's been his understudy for the past 3.5 years, and she would inherit their campaign war chest that they have together. But there's always the possibility there could be other names as well. But still, we're still talking in the realm of hypotheticals here, because what we saw tonight, what we've seen in the 2 weeks since this debate, is that President Biden has shown no sign that he's considering doing that.
Well, let's say he's weakened, but he's not weakened enough to step aside, and he runs. Are we entering a period here where voters will vote for him, even though he knows he's not quite his old self, in that they just like the brand of the Democratic Party more than, let's say, the Republican Party, and the same thing on the other side?
Oh, I think that's absolutely true. And I think in this very sort of polarized political age that we are in, people are voting for those brand names to a large extent. And we haven't seen, for all of the talk about this terrible debate that the president had, and nobody thinks he had a good debate, right? The polls have not shown considerable slippage. People are locked in, and this campaign is going to be fought on those last 2 yards of the field.
Yeah, and we haven't seen a huge impact on markets either. Gregory, thank you very much for being with us. Gregory Korte, Bloomberg senior White House and politics correspondent. Joining us for some discussion of markets is Jitania Kandhari, PM multi-asset strategist at Morgan Stanley Investment Management. Well, it's very good to have you on the program here. We are seeing a lot of churn with strength in the yen, weakness in Japanese equities, weakness in Seoul, and we had a churn on Wall Street as well, where there was this huge rotation. Interested in your thoughts, whether this is kind of a one-day development or whether this continues.
Hi, thanks for having me on the show. Well, I think, the concentration in the U.S. market specifically was very extended. And as you know, the top 10 stocks, if you look at just the contribution to overall returns, their contribution to overall returns was as high as 50% in the U.S. If you compare that to, say, an emerging market index, a third of that return comes from the top 10. So I think with the interest rate expectations getting reset, the other parts of the economy that haven't been performing, because, for example, the small caps are more floating rate debt, both in the US and even globally. They should see a catalyst here, given that if interest rates were to come down or not increase further, then that provides a nice buffer for these earnings. And specifically on the currencies, yen shows up as the most competitive and very, very cheap based on historical measures. So I would expect the interest rate differentials and the growth differentials that worked for the dollar so far should now turn in favor of the non-US and non-dollar kind of currencies and countries as well.
Since we had the long news conference and a delayed start to the program, we didn't get a chance to talk too much about the United States and the market there. So I just maybe pop in one more question, and we can take a closer look at emerging markets, which I know is one of your specialties. In terms of this rotation that we did see today, I would imagine that the bulls are not too happy by it. They'd like to see not rotation, but a broadening. In other words, they'd probably like to see those stocks, those cyclical and value names that have lagged, catch up a little bit rather than, selling from one and moving into the other. Is that something that the ship might get righted once we start getting the tech earnings? Or again, is it really just something that we have to watch closely?
I think what's really interesting, as we saw today, the equal cap weighted index really had a nice run, even, not just the small cap. So I think this, even within the mega 7, if you see, it's basically been the 3 out of the mega 4 that have driven US. So US has, for the first half, till June 30th, the first half of the year, was up 15%. 23% mega 7, out of which only 3 actually really outperformed. But the rest of the US was up only 6%. So if you X out these mega cap performance. So I think that clearly earnings are going to be critical, and there will be a lot of discerning in the numbers that is required even for the mega seven, and we're already beginning to see that. But I do expect breadth to improve, but we are also seeing some of the technical indicators for the U.S. Reaching levels that suggest a drawdown. An annual drawdown of 10 to 15% is very normal in any past year. So something to keep in mind as well.
If we get a 10 to 15% pullback in U.S. stocks, will emerging markets benefit from that, or will they fall in sympathy?
So it's, if you look at past corrections in the US, it's been mixed. Emerging markets have sometimes outperformed as well, even in the 2000 correction. Initially, emerging markets underperformed, but towards the second half of the US drawdown, they had started outperforming the US. So I do think, emerging markets is heterogeneous asset class. China is the 800-pound gorilla, and I'm not very bullish there on the market. So some markets may do well. Even year-to-date markets like India, Taiwan, and some of the frontier markets have done even better than the US. So I would think that some could do well, but as an asset class, initially you could see a knee-jerk reaction, but over time, I do expect outperformance in select countries.
Yeah, we saw yields down in the U.S. and the dollar down. That's led to strength in Asian currencies. So I'm curious where you see that as working in tandem and benefiting risk assets versus a place like Tokyo, where at least in the short term we see strength in the yen means a lot of weakness in the topics and the Nikkei.
So if you go by past relationships, emerging Europe and LATAM tend to have the highest beta to the dollar. So if the dollar were to finally weaken, some of these currencies, whether it's Eastern Europe or the Latin American commodity kind of currencies, see a higher beta. Asia is less beta driven with respect to the US, but more recently, given the yen depreciation, which has been so significant, the countries like the yuan have seen a high correlation because of the export similarity with Japan. So I would think that some of those currencies get some respite if the yen were to find a bid here. Positioning is also pretty short in the yen, so it'll be an interesting move here.
You touched on India briefly earlier. Is India the most interesting idiosyncratic story and perhaps would run a little out of sync with some of the Western markets?
Yeah, it has been displaying its own characteristics given the economic reform momentum and just the interesting geopolitical position it's carved out for itself in this multipolar world. I do think that the Indian currency particularly also looks stable, and it's been pretty resilient despite the correction down in some of the emerging markets recently, given the service side of the economy, which is driven by consulting services, and those exports have held up pretty well. I do think as under 5,000 GDP per capita, it is one country with low-hanging fruit as it evolves into its next phase of growth, given all the momentum behind it.
And finally, from China, we've got the third plenum coming up. A lot of people are kind of waiting with bated breath on what we might get out of it. Are you expecting shock and awe or steady as she goes?
I'm not expecting shock and awe. I think China, the government was meant to be stimulating consumption, but it has been stimulating industrial production. And because I think there are limitations to what the government can do and stimulate. So I think it will be a lot of localization, a lot of indigenization of technology, of the overall local sourcing of all the economic actors. So I don't really expect a whole lot coming out of
I think that seems to be what we're hearing. Jitania, thank you so much for joining us. Jitania Kandhari there, portfolio manager for multi-asset strategist at Morgan Stanley Investment Management. This is the Bloomberg Daybreak Asia podcast, bringing you the stories making news and moving markets in the Asia Pacific. Visit the Bloomberg Podcast channel on YouTube to get more episodes of this and other shows from Bloomberg. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen. And always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.